Neil, what do you think about this, I guess, the second visit by Medvedev to China? They already sealed this oil deal. They're looking at a gas deal now.
Yeah, that's right. I think relations between China and Russia are certainly on the way up, and I think Medvedev's visit will very much reaffirm that today. But it's not just talk that's moving forward here. It's really actions on the ground. In August, we saw the startup of the East Siberian pipeline, which will bring oil from eastern Russia into northeast China. And we also see the laying of the foundation stone for the Tianjin refinery, which is going to be a joint venture between Rosneft and PetroChina. So energy cooperation between Russia and China is certainly moving forward.
Yeah, that's right. And we have the Xinhua News, you know, the state agency, news agency from China, saying that China-Russia ties have reached an unprecedented height after this continuous, healthy, and stable development. Okay, so we have this oil deal inked. What about pricing right now? Are they still wrangling over that?
Yeah, on the oil pipeline, I mean, essentially the price is agreed and it's set very much by the international markets. I think the key thing is really on this gas pipeline. Russia's looking at supplying about 100 billion cubic meters of gas to China, which is roughly equivalent to the current demand in China. But the key sticking point is really around price. There's no international market for price, and it's really around the ability for both sides to reach an agreement. Now, in the trip from Medvedev to China this week, I think we're likely to see prices agreed, but certainly as we come into the first half of next year, that's the clear objective of the parties.
Okay, so gas is in discussions right now. What about natural gas itself? You know, we've seen those prices really being hammered during the financial crisis. It's come back a bit, but in terms of profitability, is it as profitable as oil for Russia?
Well, certainly, you know, if you look at the, you know, gas prices in North America, I mean, they really have come down a significant way since before the financial crisis. But if you look at prices in Asia, they're actually holding up very well. Prices in Asia are very much more linked to oil prices. And I think for the Russians, I think they'll be looking very much at linking their gas exports to oil prices in China in a similar way to they do in Europe.
And these are two countries that need friends right now. China, of course, having some wrangling issues with Japan over the fishing boat captain, having discussions about the yuan with the U.S., and, you know, Russia looking for someone to buy their gas and their oil right now. So it seems like these two parties have a lot in common. Yeah,
I think the energy cooperation is something that's clearly in both parties' interest. Remember, Russia is very much dependent upon European markets for exports of oil and exports of natural gas. And what we're seeing in Europe is really very subdued growth and very limited growth for exports. So for Russia looking to expand its energy exports, Asia and China in particular is really the key market for both oil and gas growth. For China, of course, the key watchword is energy security, which is integral to its overall development plan, and through pipelines of gas and oil from Russia, this really plays into the whole energy security theme that's very important for China.
Yeah, that's right. China does have a huge hunger for resources right now. In fact, I think they just recently had an agreement with Turkmenistan as well. What does that mean for energy prices in terms of what Russia can get agreement on from China?
Yeah, I mean, the Turkmenistan gas prices are very much based upon a European netback price. I think Russia and its exports to China will be looking very closely at that price, and that will play a key part, I think, in the price setting of any gas deliveries into Russia and China, so that they make sure they get an equivalent price to what Turkmenistan is exporting for.
That's interesting. All right, so quickly leaving with this, we were talking about, you know, gas and oil prices. Do you have any outlook for those two commodities?
Yeah, I mean, I think that we're going to see oil prices remain relatively range-bound in the short term, you know, between $70 to $80 for the remainder of this year. But as we get into next year, I think strong demand growth, you know, plus weaker, I think, supply outlook means the oil prices will move higher next year, perhaps up to $85, $90 a barrel.
Wow.
For gas. You know, I think we're probably close to the bottom of U.S. gas prices, and again, you know, we're looking at a rebound up to $7, $8 over the next 12 to 18 months.
Wow, $7 to $8. That's a 4 times gain from here. That's a huge upside potential then, Neil. Nice seeing you. Thank you for that.
Thank you.
We have Neil Beveridge of Sanford Bernstein.